Hello guys, so we are back again. I'm just trying to show you why this is the easiest strategy for you to catch the biggest moves that you can catch. Okay, so this is a chart breakdown. The trade is still running, and by the way, I want to start streaming live, but today I tried, but I don't know much about this streaming software, as I need to get a hang of it, and then we can do that. Otherwise, this is the same trade I wanted to stream, but I really failed. I was messing up. Okay, so this is the daily chart. Volatility 75 1x index. Like I keep on saying, always start with a daily bias. If you don't know what your big picture is, there's nothing that is going to make sense. All right, so you can already see there's a days open, there's previous days high, and there's fair value gap equilibrium level. Okay, there's also the final target. So three these three are like extreme targets. Starting with this one, this is an extreme target. Okay, if you entered down here and then went all the way to that previous day's high, and then you just continue hitting those marks, your account is definitely going to grow. Okay, there's nothing complicated about this. Now, okay, let me just remove these things first so that I explain what's happening here. All right, first things first, price already took out external range liquidity. I know some of you still don't understand price movement on the daily chart, like moving from internal range to external range to internal range, those things. It's very important that you understand these things, guys. If you don't, you won't have a lot of confidence for you to hold trades for long. Okay, so price came from internal range, which is that fair value gap there, took out that external range, which is fine. So after taking out external range, where else do you think it's supposed to go? So what you have is two internal ranges here. I'm talking about these fair value gaps right here. You have that fair value gap up there. Okay, that's one. You notice how I'm not marking the fair value gap like this. Okay, if you don't know how to mark a fair value gap, please watch the video on fair value gaps, either on any channel. I don't know where, but I think plenty of videos on fair value gaps. So you mark it right down here, because this is an inside candle, so we can't count it. Okay, so that is our first fair value gap, and then we have another one down here. Okay, that's our fair value gap. So price already took out external range liquidity, and it is already in internal range liquidity. Now it actually matters where price is going to end up from. Okay, first things first, let me remove this. We already have a bullish bias here. Okay, I've made, I think, enough videos on bias. Yeah, if you don't know what bias, you still don't understand, you can just sign up for mentorship, or you can, like your friends, you can just grow your account with my signals. Otherwise, it's a very, very simple concept. Price took out the previous candle's low here, as you can see. Okay, and then the body did not close below the low here, it just closed above the previous candle's low here. So we have a bullish bias. All right, so when today opens, so this is where now we start drawing our lines. Okay, So the days open, this right here, that is where the day opened. Okay, just draw a line. So this one close here. Okay, and then our current day opened right here. So you can mark this as days open. That's where it opened. So what you want is for price to trade below the days. Since you are buying, the price has to trade below the days open. Okay, and then you can look for your point of interest. If it doesn't do that, just let it ride. Just let it be, man. Just let it go. All right, what we are trying to catch here are big moves, not small. We are trying to catch those big moves. All right, so you have your days open. The other point that you need to draw is yesterday's high, because it's going to be one of our first extreme targets. Okay, so previous day's high, previous days high, previous days high, just like that. Okay, this one is a very important level. The other level that you want to draw is going to be, so like I said, we have a fair value gap here, this fair value gap right here. Okay, but when it comes to fair value gap, price tends to go into that fair value gap, but it's not just going to like just touch it and then drop. Of course it can do that, but what it tends to do most of the time is go into that fair value gaps premium. Since we are trying to look for sales, if it actually gives us a bearish bias. Okay, but this is what you need to expect in terms of targets. Okay, so when you draw your fibs, this 0.5 level there, it's a very important level. It's going to be one of your targets. Okay, so right there on 0.5, let's remove the rest of this stuff. I hope you are following. I failed to stream, guys. I'm so I am still learning how to do that. I'll just Google stuff and then maybe pay for someone to teach me how to stream or something. Otherwise, I'm trying to be more active. Okay, so this is fair value gap, equilibrium level. You can just write it like that. It's going to be another target. The final target is going to be this guy right here, that high. And the reason this one is our final target, it's because, what am I doing? It's because what we have up here, this is like our final internal range liquidity. Okay, and that internal range liquidity starts right here. What you don't want is to have it's very easy if you've already like taken a lot of money, price has already gone all the way up there. I think it just becomes greed for you to hold on to that trade all the way up. If it continues going to the upside there, you can wait. Sometimes I wait even two days I haven't traded. I'm just waiting for price to give me something I can go with. Okay, so If price goes all the way up there, just take your profits and chill. You are not losing anything. All right. So once you set those targets, now you can go down to the analysis chart. I like my 15 minutes chart. Don't know about you. If you want, you can, I know some students that use the 1 hour chart. Yeah. The thing is with points of interest. I hope you know what points of interest are. This is an area where you're looking for a potential trade entry. That's a point of interest. So here you can see you have, this is the 1 hour point of interest. You have this big fair value gap. Okay, it's just that on the 15-minute chart it was more, narrowed down. That's why I like the 15-minute chart. Okay, so let's see. So like I said, what you are trying to look for is a point of interest below the day's open. Today's day open, price open. I don't know how to say it more clearly than that, but yeah, that's what you are looking for. So already below this below this line here, what do you have? What do you have? You have this fair value gap right here. Okay, you have this fair value gap right here. So when price dropped down to that fair value gap right there, what are you looking for? Okay, so let's do this. So before price even went to that fair value gap, first of all, you also have, so I like looking at where price is coming from and where it might go, even on the analysis chart. So what you have here is trend line liquidity. Change the color. Okay, that's better. There's dots. Okay, so what you have is trend line liquidity. Okay, on the center. Okay, so you have your trend line liquidity up there. That's going to give you more confidence. I keep on saying, don't just look at one thing and just go for it. You need multiple stuff to give you confidence to enter multiple trades. Okay, that confidence that doesn't just come from nowhere. All right, so let me also remove this. I need to show you where everything is coming from. Okay, so this is where you are. By the way, you can even treat this as inducement. Okay, and then you just have to look at what is down there, and what is down here is not just this fair value gap. I'm not just going to enter because there's a fair value gap here. The other thing that you have is a hidden POI, this single candle order block here. Okay, so we have this fair value gap, that's one. Okay, what else do we have? So 15 come on, 15 minutes fair value gap, and then you also have this hidden POI right here. Okay, that's our scope. So when you go down to your entry time frame, first of all, the bias is saying bullish. And where are you? You are below the days open. Okay. On the POIs, on the 1 hour chart, you have a fair value gap. On the 15-minute chart, you have a single candle order block and a 15-minute fair value gap. Okay. So when you go down to 1 minute, what are you looking for? Always look for a market structure shift first, whatever you do. Okay. Now, I hope you people have already seen my videos on fair value gaps. Okay, the types of fair value gaps. Okay, fair value gap is more of a displacement. All right. So when it doesn't, when a fair value gap doesn't work, it becomes an inverted or inverse fair value gap. So what we have here, you can see, you can call this a displacement going to the downside. Okay. So price is supposed to respect this, but it didn't. Okay, so what we have is this movement now from that all the way to the downside. There price went up. Okay, it tried to go up like that, made a pullback here. This is a failure swing. Price did not go all the way to the down. It was supposed to make another low, but it made a higher low here and then continued going to the upside. So right here, the market structure shift is not there. It started right down here, leaving a mitigation block. Okay, so when price went to the upside right there, Jesus Christ, come on. Okay, let's remove that. So you can draw this right here. So the reason this one is a very important mitigation block, it's because of where it is, not just because it's a mitigation block. Surroundings are very important. Okay, so you have a market structure shift. So when this formed, you are not just going to enter because there's a market structure shift. Remember, you don't have any displacement. Okay, you don't have a proper displacement here. What you have are two things. Okay, a displacement that failed, which became an inverse fair value gap. That's one. Okay, and that is not where the entry was. So just stick with me. Made a fair value gap. That's one. The second thing that you have is this single candle or another hidden single candle order block right here. Okay, if you don't know how single candle order blocks are even considered hidden POIs, watch my videos or join mentorship or signals. Okay, I'm not going to explain everything here. These are very, very easy and straightforward things. So right here you have this single candle order block. We are calling it hidden in case you don't know. It's because it's not a direct single candle order block. It was confirmed as a single candle order block by this candle right here. This candle, okay, starting with this candle, just took out the high, closed below. This one took out the high, closed below. This one took out the high, this one took out the high, closed below. This one took out the high and closed above. And then the rest started closing above. So yeah, this is now our scope. Okay, so this is why the entry was right here on the scope. It's because it's like an intersection between the inverse fair value gap and the scope. And also above at the higher time frames, you have those other stuff. Let's just do this. You have the 15-minute fair value gap. You also have the 15-minute single candle order block. So yeah, I know it seems like I look for way too much stuff, but guys, I'm telling you, if you are looking for those explosive moves, it's important that you find your entries in these areas. Okay, if I say, guys, we have to buy here, this is what I'm looking for. Okay, I'm not looking for one thing. Even if price doesn't go our way, I'm going to be proud because it's very easy for you to enter here and then put your stop loss just below here. Okay, it's very easy. It's not something that you even have to think about twice. Okay, because this is a very small stop loss. So first level that we have to concentrate on is the days open. The thing is, price tends to respect the days open a lot. You can see how price went in there, hit it, and then came down, went up, started hitting it again. So it's also if I'm just looking for scalps, if I'm just scalping, because sometimes yeah, but most when I'm trading volatility, especially 75 1s, I'm not trying to scalp here. Of course, I'm going to move my stop loss to break even. Okay, when price is already like this is what 1 2 3. Okay, now the other entry was somewhere here. Remember, we still have that 15-minute single candle order block. Okay, right here. Okay, though the what was a bit bigger. Yeah, because I was not even waiting for price to make uh I was not even waiting for price to make a setup, and there's a reason for that. There's a reason for that. If I've already entered and then price tries to make another like second chance entry, and I still have things like this up there, this has not been cleared yet. And the reason this was also an easy entry is because price respected the trend line liquidity up there. Okay, this is like it's like it's giving you, when you're trying to propose to a girl, okay, and she's giving you those signals. Okay, girls are really hard giving signals, yeah, but there are those signals. All right, so if this signal is already there, I'm going to have the confidence to approach and also, okay, same here. You approach this trade with confidence because price is giving you the green light. It's literally green up there. Okay, price is giving you that green light that, hey bro, you can still try to add more. Yeah, because it's already respecting whatever is happening there. So you expect an explosion up there. All right, now when price here, of course, price almost hit the what the it almost went to break even down here. Okay, I was glad it didn't. Yeah, otherwise I would have just remained with this other trade. So first extreme target, you have this guy right here. Okay, which is the previous day's high. This was just 140 something pips. Okay, it's not, I'm saying it's just 145, but I know a lot of traders that just aim for at least 50 pips. This can grow your account. Okay, you don't need to be hitting 200, 300, 600 every time. Okay, this can still grow your account. So the reason I'm saying this cannot be like your final target, it's the way price was moving. It's the way price was moving. Okay, so right here, let me show you this on the 15-minute chart. Okay, let's just remain with one here. So this is how you at least have an idea where if price is done or not. Okay, so price goes all the way up there. Okay, takes out whatever was there, goes up, and then starts coming down. Up here, I don't know if I should just use another. Okay, so up here you have price making relative equal highs. Okay, right there, those are relative equal highs. That is money right there. So when price started going to the downside, you don't, of course price can still go all the way down and maybe even hit your break even. That is fine, you haven't lost anything. I mean, some trades, of course, you would start thinking maybe I should have just closed everything, but that's a very bad mentality. Yeah, that's a very bad mentality. You did lose anything, you already made profits. So when price now starts coming down, if you know about internal range, external range liquidity, you can tell that price already took out external range liquidity, and where was it going back to? Internal range liquidity right here. You can see this fair value gap right here. Okay, if you want to see it more clearly, you can go to the 1 hour chart. This fair value gap right here. Okay, that is where price was going back to. No wonder you can see it left this single candle order block. Okay, this is meant to propel whatever price movement is about to, to start. So you can see after this, price was just coming down to test this, and then boom. Okay, so be aware of these single candle order blocks. They are very, very helpful. All right, so where are we? All right, now I drew another. Okay, so this one right here, if price goes all the way, to that is going to be about 300 pips. Okay, price doesn't necessarily have to go all the way to that, but the thing is, you need these bonuses. Your account has already grown from this trade, so if price goes all the way to that, that is extra bonuses. If it even manages to grow all the way again to that high, that's 500 pips. The thing I like about these trades is you can just chill because you've already taken money. Okay, you've already taken your money, and then you can just watch your trade running. Okay, you can close at any time if you want. Okay, you can close anytime as you want. So the reason I'm really emphasizing on you trying to at least understand or try to learn these things, it's going to help you, especially if you are a small account trader. I'm talking about those with 100 quite sorry, it's not quite, I'm Zambian, so yeah, it's $100. If you have those small accounts, this is going to be very, very helpful. If you still find it very hard for you to do this, there's mentorship, there's a signal group. Okay, so I hope you have a good one. It's already Friday. This is the 30th. Yeah. It's already Friday. So I hope you have a good weekend. Otherwise, until we meet next time, have a good one.